Hello and welcome to Marco on Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or a recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good morning. It's Thursday, 13th of August, 2026, 9:53 a.m. My name is Marco Sheena. All right, let's have a look at the market indicator for this morning. We've got the ASX 200 expected to open lower at 0.26%. We've got those top two are from yesterday. The S&P overnight closed 0.26% higher, Dow Jones down 0.04%, and NASDAQ up 0.5% there. So pretty much flat with a little rise there on the NASDAQ. So what have we got on for today? Well, it's still reporting season. I thought today's episode, I'd just focus on our largest communication carrier here in Australia, being Telstra. So they are reporting today. Their current share price is $5. It'll be interesting to see how they play out today on the market on open. So this is a graph of their, say, last 10 years. This company floated back when I was just a young man. I think it was like, I'm going to say like $1.70 a share or something, maybe $2 a share. And they had the first float, and then there was Telstra 2. And it was quite like a buzzy thing to do. It was to buy Telstra shares at the time. I remember it was spoken about lots of. And this is their share price. It's remained fairly flat in the last 10 years. Like 10 years ago today, it was $5.17, and today it's just on $5. However, they do pay out heavy dividends. So you do need to look at the total return. So they pay out around 20 cents, 21 cents a year on, let me just put that on screen, 21 cents a year on $5 share. So it's about a 4% dividend roughly. And I think in today's announcement, let me have a look. They're going to pay out a 21 cent share again. Has been announced in the report today. So we'll just have a quick look at the report. Where's my PDF? Okay, so I've downloaded this from the ASX site via the broker. I'll just show you where that is, just in case you ever want to do some research. So in NAB Trade, and this would be the same for ComSec or Westpac Broking or whichever platform you use. If you just put in the code, get Telstra up, go down to news and announcements, and then go to ASX announcements, and you'll see the date the reports were released, and there's a myriad of them. There's usually like a highlights one or like a short version, and then there's a whole financial report, which is the one I've downloaded today. If you don't have a broking site, you can go to the Telstra website itself, and there'll be an investor portal somewhere there. Let me just have a look. Telstra. And then if you go to, usually there's somewhere down the bottom, they'll have like investors, here it is here, and then financial results, and then they'll have a history there, 2026. They've got a nice little video, And then you'll also see the reports there, which you can download as well. So all public companies generally will have this information available on their website because it's not really private. So just looking at the report, some of the highlights, I'll just go to the relevant pages. So on page 21, so they got the cash earnings was up by 11.6%. So it went from $2.5 billion to $2.8 billion. That's quite a strong increase in cash earnings. So that was a positive there. Their cash earnings per share jumped by 13.8% to 25.5 cents. So that's a considerably stronger jump than the headline of 2.7% increase in statutory profitability. Okay, on page 129. Okay, I wanted just to focus on here. So they're doing a share buyback. A share buyback is when a company actually buys back its own shares, as the name suggests. So what does that mean? It means that it's going to use cash out of its bank to reduce the number of shares in circulation. And is that good or bad? Well, it's good for current shareholders because what that does is it increases the value of your shares. So you imagine, we'll simplify it. Let's say we have 4 shares and your family members have 1 each. And now one of your family members doesn't want to participate in whatever venture that you're doing. So you go from having a quarter share, which is 25%. And then now that there's only 3 of you, your share increases from 25% to 33%. So you can see that you end up with a higher portion of the company or the business venture or whatever it is. And the reason why that's good is because if you've got the shares already, you're not physically paying for that out of your pocket. They're using the money out of the Telstra's bank account in order to purchase those shares back, which increases your the value of your shares. Theoretically, that's how it's supposed to work. The alternative is they could just give the shareholders back $1 billion. So in the report, they're going to complete a $1.25 billion buyback, and that's up from $1 billion. Okay, so that's a really positive thing for current shareholders. Let's go to page 128. Sorry, 28. So here they've got their expenses, and the underlying expenses fell by $454 million. So if you can just imagine business is operating like normal and your costs have dropped by $454 million, which is half $1 billion, close to anyway. And as long as service hasn't been affected or you haven't had a drop in customers or anything like that, that's a positive. But it can be a negative too. Like say, for example, they cut a lot of staff and then their complaints went up and then customers started to leave or they had more outages than they had, then that can be a negative. But from a financial point of view, if your costs have decreased by 454 billion, that's definitely a positive. Okay, the next one, which is a negative, is the actual revenue. So Telstra's revenue is currently $22 billion or $22.9 billion, which is just short of $23 billion. And that was actually down from the previous financial year. So it went from 23.125 billion to 22.9. That's a 0.8% drop. And just in terms of numbers, I'll get my calculator back up on the screen because they actually don't show the absolute number. So it's 188 billion, $188 million. It's not a big number. It is a big number for you and me, but it's not a big number compared to the 22/23 billion dollars. But the fact that it's fallen is a negative. And why? That means most likely it means that customers either have reduced their service level. So they might have gone from, say, a $100 a month plan to a $70 a month plan, or they might have actually most likely lost customers. So the telecommunication landscape here in Australia is very competitive. You know, most people would probably get a cold call from, I don't know, Vodafone probably every second month trying to get your business, or some call center trying to swap you over. So that's not a good sign, and you know, it's something they need to watch, especially with the changes. You know, we've got things like the Starlink, which I've heard that, I mean, currently it's doing broadband internet. It's doing internet via satellite, and it's been quite popular. Even people in built-up areas are taking on subscriptions. I've seen a couple of my clients actually start purchasing Starlink at their residential home, as opposed to using like a Telstra network or Aussie Broadband or an Optus. But I heard, I haven't read up on it, but I've heard on other investment podcasts that you know, they're going to introduce new technology that you'll be able to connect your mobile telephone to the Starlink network, and that will pose a big problem for Telstra, because imagine all those remote and regional areas that they have a high take up of Telstra products. Those customers will be able to connect and actually have probably better coverage if it's via satellite, because there's no trees or mountains or anything in the way, and there's in the regional areas there's not a high density of actual mobile towers. You know, they might be spaced, you know, 7 to 10 kilometers apart or even further, whereas in the city, you know, they're everywhere. They're, you know, pretty much nearly every 2 or 3 kilometers you'll probably see another tower. Depending on the, you know, the line of sight, which is how they work. So yeah, I just wanted to point out that revenue drop of 0.8% there. Not huge, but you know, it's something to watch out for. Okay, in page 7. So I just wanted to point out, this has happened a few times here in Australia more recently. We've had some outages, and that basically meaning that you go to pay for your coffee in the morning, tap and pay, and then the store that you're trying to purchase your coffee at can't take your payment because the internet's down and they can't connect their EFTPOS machine to the bank. So it becomes a real problem for those stores. Or in July, we saw V-Line here in Melbourne actually had to suspend their services. So that's a regional train network delivering people from the regions to the city to go to work. I think it was on a Wednesday or a Thursday from memory, or maybe it was over a couple of days. And basically, the train network, was unable to run because they weren't able to communicate with other trains and know where other trains. So it posed a big safety risk for them. So they actually had to stop running the trains for the day. So that left people stranded. People weren't able to get home from work, and the people that did get to the city weren't able to get home at night. So yeah, it posed a big problem. And there was Senate inquiries here into why there was an outage, and we've seen it a bit over the last 2 or 3 years. I know Optus have had at least two, I'm going to say. And the other concern is when these outages go out, is people that are trying to contact 000, because you've got people trying to call an ambulance for an emergency and aren't able to get through. So I think they are upgrading that here in Australia so that if you call 000 and you're, say, a Telstra customer and their network's out, that it goes over to a different network, regardless of whether you're with, like, it might attach to the Optus network or the Vodafone network, or I know that they are working on fixing that issue in the event that there is an outage. But these telecommunication companies have come under a lot of pressure about their outages. So, and sometimes it's not actually their fault. So sometimes it might be because of a third party provider. So they'll, or the power, or, there'll be reasons for outages that might not be Telstra's fault itself. So that's a risk to their business. And, if there's enough outages, then that will cause, people to think about moving telecommunication network as their service provider. The other risk I see is, again, the Starlink risk. So if Starlink starts to take on more Australian customers for their internet, then that will be a drop in sales for Telstra. So, in the V-Line example, imagine if all those trains were connected to Starlink, and Starlink, from what I've heard so far, it's been reliable. I'm sure they've had outages too, but I don't know that for sure. But I'm sure that they'll try and have good reliability in their network. So yeah, that could be a real risk for Telstra. And if there's a high uptake of Starlink, then they could lose, like, a lot of their internet customers. And also, as I mentioned earlier, with the rollout of their mobile network, if that happens here in Australia, where you can connect your mobile phone to the Starlink network, I think that will pose a huge risk for Telstra and Optus and every other carrier here in Australia. And I think there is an opportunity for Starlink as well. We recently, on a family trip, caught the train from Melbourne to Sydney here, and it's around an 11-hour train trip, and after about 1 hour, 1.5 hours out of Melbourne, you actually couldn't get any mobile reception. And I thought it was very poor that on that train service, they didn't have any Wi-Fi available. And some will argue, well, there's no coverage out there. If your phone couldn't connect to it, then of course you're not going to be able to connect to it either. But what if those trains connected to Starlink, where the satellite is their means of communication, so you wouldn't have that regional sort of remote issue if you're using Starlink. So anyway, I'd say watch this space. And the last thing I wanted to just point out was the Aura network that they're building. So they have so far laid, where is it here? Sorry. Page 11. Oh yeah, here it is down here. Yeah. So yeah, so far they have laid 8,500 kilometres of fibre network servicing Melbourne to Canberra, Sydney, Melbourne, Canberra, Sydney, Adelaide, Adelaide to Wilmington, and Sydney to Perth. And I note here in the report that they're expanding. This digital infrastructure has continued, and it's attracts strong demand from customers. And they've announced some partnerships with Google, which saw them secure an intercity dark fibre capacity on the Aura network, and Telstra access subsea capacity through the Google Pacific Connect and Australian Connect initiatives. So that's good that they're on board there with Google, because that's a massive service provider of technology. So let's go to the market and see what happened with Telstra on the end. Okay, it's logged me out. So my platform logs me out after, I don't know, sometimes 20 minutes or so of inactivity. I guess it's so that, no one can just come on board and start buying shares on your account. So let's have a look at Telstra while we're talking about Telstra and see how the market reacted to the earnings report. They are down 1.6%. So again, I think overall the report's positive, maybe even neutral, but they've been punished down 1.6%. It must have opened lower, and it's been as low as $4.90. So if we just have a look at the opening chart for today, and we'll just do 1 minute. I mean, it's only been open 15 minutes, so it did go up to start with. It did open lower at $4.92. Went up to $4.97 or 98 maybe, and then fell away to $4.90. So we'll see how that ends up at the end of the day. So yeah, now it's down 2%. So I can really see why some people prefer to sit out reporting season, because I think it's a great opportunity to buy if you like these companies, but in terms of having the stock while the market opens on the day, I think, yeah, there is some risk there in volatility, and that's not for everyone. All right, I'll just have a quick look at my approved list that I watch. We've got, a fair bit of red and a couple of greens. So let's see what's heading the charge. So Centre Group's down 2.58%. Commonwealth Bank down 2.5%. Wesfarmers down 1.1%, Woolworths down 0.8%. And then on the positives on my list, I've got ANZ up 2.12%, Sigma up 0.68%, Accent Group up 0.37%, and NAB up 0.26%. Let's have a look at the ASX 200. Okay, so we'll look at the top five losers today. So we've got Alcoa is down 5.12%. We've got Homeco Daily Needs REIT. So that's commercial real estate down 5.88%. IAG Group, which is insurance, they're down 5.47%. They were on our list a few days ago. So, okay, so they've had a drop and then a further drop. I'll just have a quick look at, say, the 5-day chart. Okay, let's go to 1 month. Right, so they've had a couple of steep declines in the last sort of week or so. I remember they were on an earlier list. We've got Bank of Queensland down 2.69%, and finally Transurban down 2.87%. Just looking at the gainers for the day. So we've got CWY, so Cleanaway Waste Management up 13.9%. Well, that's a great result for them. It's not a company I follow. Let's have a just quick look at their chart. Okay, so they've really legged up, I'd say, if we just have a look at their announcements. And they have put out something this morning, process deed with EQT, following MBO and their final FY27 outlook. Okay, so they've done some forward guidance. It must be positive, and the market's reacted. So that's Cleanaway, 13% up. That's huge. ASX, which is the Australian Stock Exchange, so they're a company in itself, and so that's up 6%. That's a good result for them. Origin Energy, they do power. They're up 5.3%. Electro-optic systems, that's aerospace and defence. They've been on, popping up a bit here and there. That's up 3.61%. And then we've got Seven Network. That is up 2.27%. It's interesting. I think NAB have got the wrong description of the company. It says heavy machinery and vehicles, but I thought Channel 7 was a telephone company. Or maybe this is not Channel 7, maybe it's a different company. It says capital goods industry. Interesting. I'll have to have a look. No, it's media and broadcasting. So yeah, they've definitely got the wrong category there, heavy machinery and vehicles. It is definitely a media company. So if anyone's watching from NAB Trade, the SGH Limited description there needs to be updated. And that's up 2.27%. Let's have a look at my stocks. So I'll just open up my portfolio view. I'll go back to the approved list. And I'm just going to open up my portfolio view. I'll just update my pricings from yesterday. So AX1 is 68.3 cents. So that's up slightly. That's still down 64%. Taking into account dividends, Commonwealth's having a bad day, so that's down 2.5%. So now down 5%. Coles is down 0.23 today, and that's up slightly from yesterday's close. So it's down 2.48%. And Westpac is also down 0.11, so it's pretty flat today, which is up from yesterday's close, so still down 6.9%. So actually, these three now have blown out a bit. We've got one that's down 5%, one that's down nearly 7%, and one that's down 2.5%. So definitely looking back now, I shouldn't have purchased last week, but you know, it did come off a market high. I thought it was a good opportunity. In hindsight, I should have waited till this week, but I don't have that crystal ball. That's a risk of investing, especially if you're doing short term. You can time it incorrectly. Have a look at the market overall, and then we'll finish up for the day. So the market is currently down, all odds are down 0.3%. And as you can see, it did open lower, and the indicator was, sorry, I forgot. Yeah, so it was supposed to open about 0.26% lower. That was the ASX 200. So it's usually a similar number, but not the same. So that's about correct. So, okay, I'll leave it there for today. Thanks for watching. I hope you have a good day, and I'll see you on the next one.